Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So it's the 21st of August. My name is Steve Vetterl. I am the firm's CMA. I act in a risk manager capacity, trying to hopefully keep everybody out of the way of craziness, which looks like it may start brewing next week. That's really unrelated to the news that you see here, but I did want to take a look at the calendar here as far as next week. So Sunday, starting the 22nd through the 28th, we'll go through the news here real quick. Not a ton of stuff going on, but I think it is really important to understand that Jackson Hole, which is being broadcast online versus live with all the central bankers in Wyoming in the past, is being broadcast live. So just with this piece of news, anything can come out of this, right? So we're concerned recently about the price of different types of commodities and assets, if you will, around the world. So with the, and I'm going to go ahead and show you the futures charts. We could take a look at, what assets are doing what, but, just keep an eye on inflation. I mean, in some cases we're seeing it at the pump. Some cases we're seeing it as far as building materials, so forth, in different pieces of the economy. As far as retail, certainly in the food sector, we've seen it going up, but a lot of this is just because of disruptions in supply chains and related to COVID. These things have a tendency to work themselves out, but in many cases it could take 6 months. So if that's what they call transitory inflation, not as big of a deal as actual inflation, which there are hints of both on this side of the argument. We'll talk a little bit about today, but do be aware of this Jackson Hole. You can always click on any of these folders if you want to see the specifics of what this is. This is a big annual symposium. It is online this year. So for those, it looks like somebody is in the chat room talking about audio. If it seems like you're having any issues seeing my screen or hearing me, just log back out, log back in. That should correct most of the problems. Do keep in mind that not sure when I've got all the login information for AP Live. If you guys have not seen this email, please read it, go through it, make sure everybody on your team sees it. That way you're not left flat-footed when we switch over. So I'm going in this weekend. I'm going to mess around with this. I have all the login information. We will not be at some point, let's just say at some point, I will not be broadcasting via Zoom. And I hope this AP social, which almost inevitably we have to more do ironing out of different kinks and stuff inside the system. But I broadcast live via Zoom a lot. We do a lot of client meetings and different stuff for that. So just make sure you've gone through this email. You can log in and be able to see AP Live. The Q&A window is open if you guys have any questions now. Currency pairs you want to see a little deeper analysis on, general questions on anything. Do keep in mind as we come into the end of the summer, got about technically 2 weeks left. You're probably going to start to see volatility and volumes pick back up as large institutional managers are essentially back on the desk from what more than likely has been a fairly prolonged vacation for some of the richest. So that means potential volatility for the markets. Can't say when, can't say what duration, can't say to what degree, but just know that. So looking at the calendar, that's next week. Don't know that I'd be trading Thursday or Friday. You could certainly not accept trades, right? You can turn your systems off. If you're already in trades, obviously you do not want to step in front of the software to mess with it. And I can tell you from an example of the beta test that we were in for our new Flash software, that very simply the mistakes in terms of drawdowns that some of our beta test group have experienced, it is 100% because of they were in there tinkering around with the software. So our Israeli developer has said many times with that software, once it goes live, don't get in there and mess around with it. It's that simple. I'm not smarter than any of these software, right? All I can do is from a manual trading standpoint, obviously trade the patterns that I have learned or the patterns that we have taught you in either the Hawkeye or Arrow rooms, which are switching over obviously to AP Live as well. Another reason to learn the platform, so you're not caught flat-footed in any of that. So with that in mind, let me switch over to finviz.com. If you're not familiar with the site, it should be bookmarked. What should be bookmarked, in my opinion, is the chart portion, daily charts of everything globally. So you look at indexes across the top. These are the big indices. No, we've finally started to see some corrections. Some of the small cap sector, Russell 2000 here, have corrected a little more than some of the bigger indexes. Obviously, the Japanese market's in more of a downtrend, but we've started to see our first kink or crack, if you will, in the armor because of the fact the VIX has perked up a little bit. It's just a measure of volatility. And these numbers are small right here, okay? We start to see these numbers, things are going to get more volatile, and it's inevitable, right? If you look at the long term on these VIX numbers, we've seen some craziness. This is pandemic, okay? If we were actually able to go back even further in terms of data, with like right around here, it'd be 2008, you'd see numbers just like this during the financial crisis, so forth. So just note, you always want to pay attention to the VIX, have it in your arsenal, take a quick peek at it. Now, as far as the rest of these charts that I follow, outside of that, do note the weakness we've seen. Again, always want to double check. We're looking at the daily charts here. This is the weakness we've seen in energy. So weakness we've seen in metals, right? Doesn't look inflationary to me right here, huh? Weakness we've seen in partial amounts of commodities, certainly soybean related, right? Oats has been on the stronger side, but almost everything else has been weak, you know? So where's the inflation they're talking about, you know? This one's concerning me the most, this and copper. Why? Because it's way down. You know, if the economy was really heating up, especially in what has, at least from my experience, especially since we're looking to move and or build a house in Florida, even though a lot of the prices of construction have gone up, lumber is cratered, it's not being reflected. You're being overpriced by a lot of building materials companies, at least from what we've seen, because of that fact. So just be aware of that. That could certainly spill over into currency. So if you look at the bottom, US dollar, we're at the highs we have been at. This high, which is a little bit of a rejection on Friday, you can see here, but we've really moved up, right? Consequently, everything else has moved down, right? So if you don't want to get into too much detail, you can just poke through this and see, you know, we're lifting, everything else is falling, right? So typically tells you just generally from a daily chart perspective, if that's your trading or you're accepting trades, you know, you should be much higher in your accepting of shorts in these currencies, right, in relation to the dollar, I should say, than going long any of this stuff in relation to the dollar. Now, you know, everything I say could completely change next Monday, right? And the dollar could start to see significant weakness dropping below this 92 support area here. Consequently, everything else starts to lift, right? But all I'm saying is just be aware of this. You don't have to do a deep dive. That's really sort of my job for you guys. And for the question I just got, I try and do these calls at Tuesdays at 10 a.m. And then a little bit of a more expanded call on Saturday, 10 a.m. Pacific time. So let's go into the charts. bore you with any of this stuff. We've already been through that from a basic standpoint. Here's the DXY. Note this little rejection here. It's the highest point we've seen in a while. Go back to 31st of March, we saw this high point. Anytime before that, had a really good consolidation. And then we broke down from that point. But essentially, the highest we've seen almost in the last, there's the 24th of September. So basically in the last year, we've seen this approximately a buck higher on DXY. This ultimately, in my opinion, is the ultimate resistance right here from a daily chart perspective. If we drop over to weekly, bigger numbers, but you can see where now, if on the weekly chart, where we spent a lot of time and then we broke from this moving into the pandemic, and it has become just absolutely rock solid resistance on the upside. So anything in 94.20-ish, 94.50 to, well, hell, 94 to 94.50, that whole zone, which notice on the weeklies, there's been a whole bunch of stuff lining up here as well. From a moving average standpoint or Bollinger Bands, this should contain us. I can tell you, if we were to burst above this and spend a couple of days, maybe a bit less, you're probably going to see an absolute burst into 96, and it would be a stop run. And this would be something where I would not be short anything in currency land in relation to the dollar, right? At some point, that trade would get stretched, and I can make the statement that I would step in front of the freight train, but typically I do not want to for seeing it. I can't say that we'll even see that this year. Maybe, right? Dollar certainly looked at, even though all the crap we've done in this country and the debt that we've accumulated, dollar still looked at as a reserve-based currency globally, right? Some may disagree with that. Charts don't lie. So just know that at some point, we're probably going to go up and zip before ultimately we make it to much lower levels, which is what I'm forecasting at a drop into the 85 area. But I don't think we will begin to see this until we've blasted out enough stops that are building up in this 94 and up range. On the opposite side of that, daily chart of the euro. Same thing could be said if you just flip the analysis I've done completely upside down. You're going to see the opposite of that, right? Line in the sand right here for the euro, this is the 1600 area. British pound, we're at support. We're at it right now. This whole 3600-ish area with support. Underneath that, you can see where the next pattern, which is mostly a center point as far as the profile data volume profile, but the center point here is this 30, say just under 3100-ish area. For the question I just got, the symposium starts Thursday, August 26th, which is day one. It has day two. It actually runs into the weekend too. In the old days when they'd all meet somewhere, all the Fed chairs would take like a big fun group picture. It's funny, this is Mario Draghi standing next to some of the old time. In any case, I digress. So let's move into US CAD, which has been a little more wild. Okay. So let's take a look at that. Personally, I didn't think this would hold, and it didn't. So when we burst above this, a lot of I got a fair amount of DMs asking me why, right? Most of those people that DM'd me, they didn't have probably maybe they didn't know to watch any of my multiple discussions on running stop pockets, which essentially is once you have an area like this, most likely, and this can apply to any asset class where the chart looks like this on a daily perspective, anything that bursts above this level, you're going to run all the stops. Now, the question is, will it hold above this level? Right. And that's when the concern from an institutional standpoint, or anybody that's short this currency in relation to their software, you didn't want to see this. You want to see us go up and run these stops and then finish back under this fairly big and really important resistance level at this 2840-ish area. We finished under it. So anything CAD based, right? And notice they made some changes to, especially in Gearbox. I don't know if you saw that. If you guys were running Gearbox, they made Tyler and a team made some changes to CAD based pairs based on some of this volatility. So just note that if you hadn't already seen that. I always post the developers' comments to my Market Watch channel and Telegram, which will be switching over to AP Live at some point. Let's take a look at dollar yen's relationship, still stuck inside the very, very tight range, still coily. More CHF pairs, which the Gearbox team has made changes to as well. Note that. Still inside a tight range. Weekly chart doesn't really provide any better perspective. And let's take a look at GBP JPY. So pound yen, again, we're at major support. Notice we popped right off it. Take a look at the weekly chart as well. Yep. So this whole 49 spot 40-ish area, it's the edge of the cliff. Just note that. Not something, quite frankly, if we get underneath these levels and spend anything more than a day or so, that I would want to be long any, especially this pair. I would not want to be long this pair. I could be short, obviously. It's more than likely we're going to go down and fill pockets of stops. CAD. This is the Neo currency. We're daily here. Again, and you can see how it went up, ran all the stops. Obviously, this is related to the move in the Canadian dollar, in my opinion. This is the precursor currency. So when you analyze this one, if you haven't heard me say this 100 times, start with the relationship between US CAD first, right? Consider this to be the #1 major in the Canadian relationship. And then you can move to GBP as, let's go to, as your secondary relationship, maybe Euro CAD to a lesser degree, but this being important. Went up, ran the stops. Now we're back still inside this balancing area. We spent some time, and we get anything above this area. Not as really much of this area, but certainly spend any time above this 75-ish area, we're going to rip to here quick. And I would hope that Neo is going to be riding that up, not trying to short that freight train. Does that make sense? This was certainly a worthwhile short. We could drill down into a 4-hour and see probably a lot more reasons to take the trade, or maybe even an hourly chart. But just know that these squeeze zones area, which is just an amalgamation of a whole bunch of resistance and support based algos that Desan built, stuff has been rock solid, guys, especially on the higher time frames like the weekly. So we look at the weekly. I mean, this is yellow, red, whatever you want to consider it. The point is this whole 7750-ish area should contain us from a long-term perspective. We spend any time closing above this area, all bets are off, and there's no way that I'd want to be short this. I don't care if I'm wrong. 100%, I would not step in front of the freight train on this one. I think this is probably just a quick note. Whole bunch of stuff showing up here. Even if I extend this trend line, all of this stuff here should support the price of the pound. But crazier things have happened with these franc relationships, I'll tell you. GBP, JPY, I think there's probably of note to those as well. Let's jump back to daily. GBP, NZD, again, see that where it keeps running up there with those stops, but there's no, at least for now, no institutional interest in holding it or running it above that area. There's some tells there we can pull off in terms of analysis of other currencies. All right, gold for the question I just got. Daily chart, gold spot. Place to really buy this dog was down in this high 1600, just a little bit under 1700 an ounce. This is the place to be long. Don't know that I'd be long here. Mostly because I just really, this is like looking through muddy water to me right now. I don't really have a lot of, I mean, you can see where all the support and resistance levels are from a daily and a weekly perspective, but you know, no surprise that 1700 is the edge of the cliff. Every time we get down to that area, we get some buying that takes place, but we're back up in the chop and broccoli area, which is difficult to trade in. We usually just want to trade extremes, right? Newest traders that I always used to teach from a mentorship level way back in the day is when, you know, we look at profiles and all the stuff we look at, always trade the extremes, right? Those were always the easiest trades because it was an absolute reactionary. Was one of the few times, if not the only time, that a super reactionary trade or a move into a big level quickly and it's quickly rejected is the only time that I step in front of the freight train. Because you know it's going to snap back, at least in futures land. Be a little less with commodities. So GLD from a volume perspective, let's just look at the volume before our current move. So if we're just looking at the volume that's been executed while we've been in this move, which is basically 2 years is what you're looking at here. Center point, we're right on it. So this whole 1620-ish an ounce. Keep in mind, you're looking at the spiders. This is not spot, but it helps us with a volume profile. Drop back to dailies. You really only want to look at the data from when we got into this move. From now, we're looking at a daily chart perspective for spot or for the GLD. 1 year essentially here. We have, you know, we're right on support from a volume perspective. Now let's take a look at some crypto. I'll tell you, this chart I've actually been wrong on because I figured we'd see this first up here, and then we probably have, you know, some sort of flag formation. We go back down and test the lowers, but we've continued to see higher, you know, and this, at least from a daily perspective, if we look at it on a weekly perspective, you can see that there is some resistance here, only from just a price action candlestick view, not any of my other indicators. But if you drop back to the daily, I always like to look at the whole move. From a volume perspective, high point of the value area highs 60,000 a coin. Value area low from a volume perspective is 26,600-ish. These top ends represent 70% of what's called a value area for those. Those are outlying areas of note, but at the same time, you know, we're above and we spend at least a day or two. So The argument from the crypto space is that we go higher. I just don't see it. Volumes have been low. I mean, you can see right here, most of these moves. Look at this, generally a declining volume. So from a participatory standpoint, which is measured by volume, there just hasn't been, it's just been a drift higher. A lot of that potentially could be the case because of, you know, if you always have what we like to call the junior folks running the desks globally, right? Because a lot of the senior people are on, you know, they're unwilling to take, in many cases, big positions against stuff. From an institutional perspective, you know, if you're JP Morgan's currency desks in either London or New York, right, are you going to be going out and without your big dog portfolio managers putting huge positions on in these areas, right? Not as much of a solid argument from what I'm presenting in crypto as other assets, right? Oil, some other commodities that they may be using as a hedge as far as trades that they're doing. So just keep that of note. This could become an area where it just gets banged right back down real quick, which is going to fry a lot of the retail crowd that's gotten in here. Hey, I hope I'm wrong, you know, and that everybody continues to make money in this from a long perspective, but you can make money in this from a short perspective as well. Do keep in mind too, if you guys don't feel like screwing around with questionable ass crypto accounts that it seems like there's always a story of some crypto brokerage firm running off with everybody's money. BTCFX. Okay. So if you don't know what this is, it's an actual mutual fund that trades Bitcoin. Do your own due diligence, look at the perspective, look at the costs, obviously. Past performance is no indication of the future, but ProFunds is a very, very well regarded fund family that has ETFs and funds that allow you to trade both sides of the market in a leveraged standpoint. Some of the ProShare funds have super huge volume in terms of the trading that goes on the exchange. So you can utilize this from a long and short perspective, but take a closer look at it. I have not studied this to a large degree yet, right? This was just approved. A lot have been trying to get a Bitcoin-based fund approved, and the SEC has just not allowed it. But ProFunds has a really good established relationship as far as a big fund family with the SEC in this country, and it is a safer way to do it. They don't actually invest in Bitcoin itself. They trade the futures markets, which trades on Chicago Mercantile Exchange. You can always do a Google search for that if you wish to trade Bitcoin in your American-based brokerage accounts. Or even something like an eToro, which is one of the big brokerages overseas. I am not a fan of Robinhood. I do not have an account there. I do not recommend you set up an account there. There's too much crap and shenanigans going on with those idiots running that company, in my opinion, even though it has gone public and it is publicly traded. Just my opinion. I'd rather have an eToro account. So, and I can recommend that because I am a financial advisor. Ha ha ha. Anybody have any questions on anything else? Because if you don't, I recommend spending some time this week and make sure you understand the news, make sure you got all your charts set up correctly. Obviously, feel free to watch any of me in the past droning on and on about these calls. Now I provide hopefully good value. But at the same time, I think it's important that you guys spread the word about this AP Live, because at some point it's just, you know, you're going to go to log into Zoom and be like, where the hell is Steve at? Well, it's because it's an entirely new platform that even I've got to learn to migrate into. Thank you as always for the support. Get the word out. I noticed these calls of the attendance started to really pick up. We've got a huge chunk of people on the call, which is good because, you know, obviously you can always listen to this recorded, which is fine. You can't ask any questions. So that's really the key. You know, just get in there and ask questions. Thank you, everybody, for your support. say a prayer for me because we can't find a damn house in Florida to save our life. So hence me bitching about all these commodity prices all the time. But thank you, everybody. And we will see you on Tuesday at 10 a.m. May the trades be with you.